Let's go right to Steve Forbes on reading what is now and has been a market rout. What do you think, my friend?
This is classic panic. And people, the emotions take over. You know, everyone says they're a good long-term investor until the market goes down. And then it is, oh, can I get out? Do I have to pull my money out? So emotions take over. And this is about confidence. It's not the facts on the ground. It's actual confidence. And this is a damnation of the leadership. They just don't believe when they say things are not that bad. The U.S. banking system, not so much the European, but the U.S. banking system has never been as strong in terms of balance sheet and liquidity. They learned a lot from 08 and 09, 2008, 2009. So they're in much better shape. But the panic is out there. And I would think that smart investors, ones who have a strong stomach, this is a buying opportunity. They say, oh, it's like trying to grab a falling knife and all that kind of thing.
Right.
But if
you'll never time it perfectly.
Never time it perfectly.
But we have learned from other meltdowns that, you know, it's darkest before the dawn. I came up with that myself.
Yeah, great phrase. I'll make a note of that.
Thank you. But, you know, one thing, I think what added to this was the comments out of Larry Fink, I think, at Blackstone, saying the dominoes from easy money are starting to fall, that this is a slow rolling crisis. In other words, he's saying it's going to get worse.
Well, this is what happens, and this is where you get to the Federal Reserve and all central banks and finance ministries going for years and years of no interest rates. So when money is free, companies take it on. They may have losses, but so what? They can always get more. Countries, I think we're going to see crises there. They borrowed a lot. Japan has a debt twice as our own, national debt proportionately. So there's a lot of, it's not so much dominoes, it's the people who went out and thought that short rates were forever are going to get caught. But that doesn't mean the whole economy comes down. It just means a lot of companies are in trouble. But one good thing is that this recession, if it ever comes, theologians proclaim one, companies have had a year and a half to get ready. It's been proclaimed. Usually recessions come when you don't expect it. This time, everyone knows something is coming. Banks have had plenty of time to get their balance sheet in shape. So yes,
some of them didn't. Right now,
some
there's
of them
a lot
didn't.
to be said of this and about who would have thought that holding treasuries would come back to boomerang you, but it depends on when you bought the treasuries and then the treasury notes and bonds. And it turns out, certainly, you know, in the case of one bank, Silicon Valley, they were buying them just as the Fed was starting its hiking campaign, or most of them. And now they're underwater.
And they continued, and they violated two rules of central bank or banking 101. If you go to a business class, they tell this on day one: assets and liabilities. Obviously, when you take deposits, you're going to be making loans, so you have to be careful on that and keep a good cash reserve. But they ignored that. And when they went out, going out 5 years, 10 years on government paper, when the Fed has announced they're raising interest rates, they didn't hedge. They didn't buy insurance. And so they
could have had a way to prepare for redemptions. No one is ready for, you know, just a break and everyone leaves through the same door at the same time. I get that. But do you see a potential Lehman moment here, Steve, where others sort of get afflicted by the same thing and through no fault of their own are caught between a rock and a hard place?
This is where I think, and I'm a conservative, but you have to be ready to intervene to make sure the innocent don't get dragged down with the guilty. And emotions eventually do come to their senses after a while when they realize the world is not coming to an end. No meteors are coming. But this then also gets to the FDIC. I think there needs to be an investigation there. They grossly mishandled this situation. There are plenty of VCs, plenty of people with money ready to invest in Silicon Valley.
So the FDIC's move, you're referring to go way beyond protecting those with $250,000 in the bank or couples with $500,000. They extended and made it limitless. Now, that would cost a lot if they had to do this for every other bank.
Yeah, but if people begin to get confidence the world is not coming to an end, you're not going to even have to close to that. Silicon Valley Bank, when you liquidate those assets, most of it's going to be money good. There's going to be very little losses. But why didn't the FDIC cooperate in making a sale to this bank or arranging an infusion of capital? Remember, Warren Buffett saved General Electric and a couple of other companies by making some timely investments.
But what if that hadn't materialized fast enough? Isn't the argument, Steve, with this that you got to move fast because in the heated moments, there's no time for rational.
But the thing is, people do move fast. I know
Right.
some venture capitalists got calls over the weekend. Can we get in on this thing? What's being done? And so they are willing to move fast. You have a J.P. Morgan Bank was already out in San Francisco calling up customers saying, you want to come with us? People move quickly when they see an opportunity. It's not as if this is the first time we've had a
But
banking
some
panic.
people had forced marriages. I can remember during the last meltdown, Steve, when Bank of America had no choice. You got to buy Merrill Lynch. You got to scoop them up. J.P. Morgan Chase. You got to buy Bear Stearns. And maybe once burned some of these same banks or other institutions we don't know yet. We're saying, you know what? I'm going to be more than twice shy.
Well, I think this is where, again, when you have experienced bankers who can quickly size up a situation, that wouldn't inhibit them in terms of they know that the bank had a lot of assets, had a very good loan of book loans. They provided great service for startups. I know some of these people who have startups. They say that bank service was superb for a startup. So banks knew what was there, and they could quickly make a decision. Remember, they're going to get a bargain. They're going to be able to buy on the cheap. So you factor in, there's things there we don't know. You factor that in, but you move quickly. And the FDIC apparently had some banks, they don't like banks getting bigger. Well, when you have a crisis, guess what? That may happen with banks when you bring them together.
Right.
But so the FDIC needs an investigation. And then also, at some point, Congress got to ask the Federal Reserve, why did you go for a generation with no interest rates, which is the equivalent of rent control?
Well, that's the big issue right now, whether that's coming back to haunt us.
Absolutely.
Here. Now, the Fed meets next week. It's kind of damned if it does, damned if it doesn't. If it holds off on another rate increase, some people might say, what do they know that we don't know? Or have they lost the inflation fight? Others might just welcome it, just stop the madness. Where are you on this?
Since the Federal Reserve believes you fight inflation by trashing the economy, I would hope that they would stop. But the key thing is, how do they explain it? They can point out that there are signs that inflation is beginning to come down. John Catsimatidis was on Fox earlier today and made the point that in terms of producer price index, you have oil prices low. It takes several months, 3 months, 6 months before it comes through.
So it might already, the effect of those higher rates that really started a year ago this week, now we're finally seeing it.
Yeah, it takes 12 to 18 months. So that's already starting. And it's like turning a big freighter, tanker. It takes time before the ship moves, even though you've turned the wheel.
Yeah, got it. All right, Steve, thank you very much. Steve Forbes on that.